All right. Good morning, ladies and gentlemen. Today is Wednesday, December 18th, and 1 week from today is Christmas. So obviously, I won't be doing a show next week, and it's the week before Christmas, and so I think the market is going to probably start to get a little dull from here, although you never know. We're in kind of a news driven environment, and anything can happen. Today is all this impeachment stuff going on, and so that may have a little bit of effect on the market. I don't know. However, the market itself is pretty extended. Pretty extended. It seems like it's just been kind of drifting up day by day by day. And so let's take a quick look here at the S&P and this current run that we're on. Pretty significant. It's a pretty significant run. Interestingly enough, it started back here on 10:10. I'd say from 10:10, which was a Friday, or no, I'm sorry, that was a Thursday. 10:10 to 10:11. This little area right here, these couple of days. This is when Trump actually announced the trade deal, like phase one of the trade deal, right? And the market took off from there. And the funny thing about that is that it was not really in the can, right? They came out that day like big news towards the end of the day there on the 10th, acting like the phase one of the trade deal was a done deal and everything was going to be you know finalized or whatever. And then so the market kind of took another leg up there. Is what it did. And after this pullback, and then somewhere right around here was when this is when the Fed actually lowered rates, right? Cut rates for the third time. And somewhere right around here, I believe it was the 15th, this little window here, is also when the Fed announced their QE4 and their balance sheet expansion and all that good stuff, right? So it was kind of the 1-2 punch that kicked off this big rally that we got going on here, right? And so, I don't even remember what this was about, to be honest with you. This little 2 day sell off that may have been something about obviously the phase one trade deal, something like that. It was kind of an unusual little 2 day sell off there that didn't get any traction. And then of course the theoretically phase one of the trade deal, which is what I've been talking about. It's unfortunate that it's so silly that the market moved on a daily basis, sort of based on that, but it did. It honestly did. And so, but here's something to look at. Let me find. There we go. This is the chart I was looking for. The RSI here, I'm not sure what this is telling us yet, anyway, but typically you want to see the RSI when the market makes a higher high, you want to see the RSI make a higher high. So there's a little bit of right now anyway, there's a little bit of a negative divergence there as far as the RSI goes. And of course, it's back over 70. So theoretically, you'd want to see, and this may or may not happen, but you'd want to see the market push higher and that RSI on this particular day. Let's see that high right there. RSI got up to 75.66, which is pretty significant, right? And see, over here where you had the RSI over 70, you made a higher high in the market and the RSI made a higher high. But this time, the relative strength, I mean, you can kind of tell yesterday was I believe yesterday was the narrowest range day of the month of December, right? And so it's kind of floating higher here, but yeah, this big rally is still intact, and it's difficult to draw a trend line here. While we're over here, speaking of RSI, I wanted to look at the weekly RSI. Yeah, it's over 70. The weekly is, and so the last time that the weekly RSI got in crazy territory, it got up to 90, right? Back in January, we had this sort of melt up in the beginning of 2018, and then took a hard tumble there. And quite frankly, I mean, the RSIs were extremely extended. So the market's, the market is, I actually have this red line at 80. I don't know why. It should be at 70, but I usually keep it at like 70 and 30, but I have it at 80 for some reason. Maybe because I had set it when it was back here. Anyway, moral of the story is that the S&P is a little bit a little bit overbought here, a little bit extended, and here's my chart with the Bollinger Bands. Right, a couple days ago on Monday, basically, it was outside the upper Bollinger Band, and you can see that now it's back inside the Bollinger Bands here. So quite a bit extended from the middle here. It's extended from the. I've seen some people with the two. Whoops. I got so many charts here, like so many configurations, but I've seen some charts posted where S&P gets extremely extended from the longer moving averages. Like there's the 200-day moving average, right? And so the percent distance between the 200-day and where we are now is a lot greater than it was, back over here and back over here throughout the rest of the year. So whether that means there's going to be a reversion to the mean depends. And the other thing is like, everything that's happening right now is kind of, we're basically headed right into holiday mode. And so the overall market, geez, the S&P could drop significantly and still be in an uptrend, this uptrend, near term uptrend, right? What I was saying before about drawing a trend line, I'm not even sure, how you would draw a trend line across this with this one crazy sort of bar here, one crazy day, but I guess you could, the if you drew it like that. Now, of course, this is the end of the year, right? I put that on there so that just for some context, everything obviously is measured, year to date, calendar year when it comes to the market. So yeah, that's a long way down, and even if the market did have a little dip down to there, obviously it's still in an uptrend. So you could eliminate that day and draw this trend line a little differently. Um, Regardless, yeah, it's pretty interesting to see that essentially, they now they start to come out and talk about a melt up, and for all intents and purposes, we're kind of in the midst of what I would say is a melt up here. So a little bit extended though. It's pretty obvious to see. Let's see. Last Thursday, that was the big breakout. Sort of a little flat top. After that little dip right there, market busted out there, and so it is what it is. It seems like we've kind of reached the point now where the buyers are starting to dry up a little bit, right? Market's overbought, simple as that. So, real quick, let's look at the other indexes. There's the Qs. Same sort of thing here. The Qs have a very similar pattern to them. of course the Qs are weighted. I mean, a lot of what's driving the indexes here is a small handful of the big cap stocks. Apple especially. Apple is year to date. Apple's up like 70 something percent or whatever, something crazy like that. So actually, going back to these lows back here. This low right here, what was that? 142. That's close to a double since these lows. Well, that low was on that was on January 3rd. Huh, interesting. Yeah, so, Apple's obviously the most widely owned stock on the planet and been a tremendous year. And so that's kind of that is driving, a lot of performance. Microsoft too. Microsoft, same sort of thing. Huge year. I mean, the percentage gains in some of these big cap stocks that are, especially in the Nasdaq, like I forget what it is, but a long time ago, somewhere I've got a graphic that shows the weighting of like Apple and Microsoft and Google, right? Google, another one, and these things are up. Even though Google took a little dive here, mid-year, look at it now. And Facebook, obviously. And so kind of based on the idea that we had a big market sell-off, and that's kind of funny because what's interesting about this is that it just so happened that the market, had that major sell-off last fall and last winter, and then turned around right at the beginning of the year. Right? Actually, it was a day after Christmas was the big turnaround, but. And so theoretically, like the year is going to look spectacular year to date, but the real like gain in the market, I'm going to say, the real gain in the market is more along the lines of from before the 20% sell off. And just so happened that coincided with the end of the year. So this is basically the gain of the market from these prior highs here to where we are, and so it's still respectable. But as you know, the market is kind of well, in the short term, it's overbought, and obviously that doesn't mean it can't. That doesn't mean something happened to my stream there. Huh? That was weird. My stream got disconnected. That's strange. It's back on now though. So anyway, it is what it is. Start off with the DXC. Now, this is a really super expensive stock, right? I mean, 216 bucks. Um, let's see. Look back. Look back. Yeah, it's kind of it looks like we had a trade back here and I can't really tell what happened here. I can't really tell what happened in March because I didn't mark it up. I didn't mark the rest of it up. I mean, it looks like it got some traction and then had a sell off. But anyway, yeah, it's not really my favorite kind of pattern, to be honest with you. With this big gap here, it's kind of a toppy looking pattern, but it is what it is. I mean, the stock obviously is in an uptrend, and it's just had this pullback, that pullback right there. Nice little, perfect pivot low, and so here we are, right? This initial stop's kind of it's a little bit above, it's above the pivot low, which is kind of interesting, but it's got an okay look to it, I suppose. I've seen this type of pattern where it just turns around like that after a dip and marches higher, but this is kind of, it's the gap that's bothering me, I think. Plus, it's a really super expensive stock, so we'll have to see how it plays out. To be honest with you, I mean, obviously, obviously if it breaks down below, this area. Speaking of which, I wanted to there was a stop out here. This is this is really this AutoNation, right? We had one decent trade in it back in October. This thing is just so crazy volatile. Look at the ranges on this, right? I mean, look at these long range days. They're just outrageous, and this one in particular. So I don't know. I mentioned to Jeffrey maybe we should put this on. We could just put this on the no trade list, right? Just ban it. And so here's what happened is it had a decent pattern, obviously. Broke this trend line, big long range day up. Here was the trigger price, and then so this was the initial stop, right? Down towards the bottom of the lows of the pattern, and so rallied up, and then one big long range day down that never actually hit the initial stop, but the way that the system works, is that it gets that stop up really quick. And so what happened was, the day after it triggered, like literally that night, the trailing stop moved up to, just under the more recent lows, and then you get that one crazy, um, long range day down. It's very similar to this one, actually. It was very very similar to this one, but it is what it is. And so the behavior of this stock with these big up and down days. So this one's kind of weird because if that initial stop had just stayed in place, it wouldn't have got tagged. And I mean, here we are today. We're right back around the trigger price there. So that was kind of, I'd say that that's kind of an anomaly. And by the way, this day, absolutely no news whatsoever. I checked literally every single source that I have, and there was no news, right? It's just sort of the nature of this particular stock that it has these crazy long range up and down days just out of the blue. And that one was actually longer than normal, it looks like. I mean, I see a few days on here. So anyway, that was sort of an anomaly. You hate to see it, but it happens occasionally. The strangest thing, and everything about this was an anomaly. I mean, I think it was down like over 5% that day on literally no news, and then boom, right back up to where it started from. And so perhaps in the future that particular stock should be put on the no trade list, just because of these outrageous sort of movements here. Anyhow, and over here, I'm going to assume same thing happened right there. Everything was going along, just fine, and then one day, and then look where it closed that day, right? Look at this on a, whoops, look at this on a candlestick chart. Hang on, let me change this to a candlestick because the candlestick chart will. There we go. Yeah, this particular day where it would have tagged this stop, um, you can see that it was just a tail that it closed way up here and then continued to rally. And so and you can see on the candlestick chart these big long range days down sort of out of the blue. So yeah, it's not the greatest stock for swing trading because of these wild moves. So anyway, all right, so DXCM, this thing's triggered in here today, and long as it keeps marching up here, the that target looks pretty reasonable. So let's move down the list here. CDW looking pretty good. I've updated last night. I updated the trailing stop. By the way, the updates have been a little off this past week or whatever because of me, because updates have been a little off because of me out doing stuff. And so I mean, while the system is all automated on the back end. I still have to click buttons to to get it to get it updated on the actual site. I got to click some buttons, and so if I'm not actually physically at my desk to do that, like we had a birthday party. I think it was at some point. I put a note up because I knew we were going out to dinner and a birthday party, and that I wasn't going to be home till 10 o'clock. So I put a note up. But if it ever seems like it's late, no big deal. It just means that I'm involved in holiday stuff, and I haven't had a chance to click the buttons in the evening. We typically get like the data update. Yeah, a couple hours after the open, 2 to 3 hours after the open. That's the normal schedule. Around the holidays, it may vary a little bit based on my availability to click the buttons to update the site. So, no big deal. You can always count on getting up in the morning and checking it first thing, and everything's updated. So, even if I have to update it at midnight, though, I am going to update it each night. So. We got big stuff going on for Christmas and the holidays with family coming into town and staying with us and all that good stuff. So, anyway, so CDW moving along very nicely, looking good, beautiful stock, nice uptrend. Um, triggered in over here, and you can see we talked about this one last week. Trailing stop all the way down at the bottom of the pattern, moved up immediately, like on the very first update after it triggered. Trailing stop came up, and so we've had a couple of ratchets higher of the trailing stop. And now with this pattern, now that we're on day 3 of this, I would expect it should move up fairly close to break even. So this one's looking good. Everything about this looks pretty good. Although, this kind of looks like it looks like a bull flag in the making. And so obviously it's only a couple of days old here. And so there could be some volatility inside of this, but so far so good. Stock's up at a new high, and it has a habit of sort of, hanging in there, chopping around sideways. So this latest rally is looking pretty good. Once that stop gets up to break even, then it's going to look real good. The TPX, this was one that back when it was actually triggering in, I think. Well, and last week, I guess, like last week was right around the time it was. But I drew these trend lines, and looking good, looking really good. What's kind of neat about this one is that and this trailing stop, by the way, I was sort of thinking last night when I updated that it was going to move up, but it didn't. It may, it may be since day before yesterday was a long range day up, and yesterday it just kind of hung in there that it hasn't ratcheted. So we'll have to see. We'll have to see if tonight's the night that this stop ratchets up a little bit. But same sort of thing here. Within, barring any sort of big move down, I would say that either tonight or tomorrow night that this stop will probably ratchet up pretty darn close to the trigger price here. So that'll be sitting at break even. Just another all around beautiful pattern, right? Stock in a nice uptrend, and look at that. Back to the beginning of the year. It looks like we have had a couple of trades here in this, and so it's looking pretty good. I sort of like the way that it's in this uptrend, pulled back, and of course I drew the trend line based on that pullback. But so it broke this trend line, and now it's just sort of marching higher. This I'm going to assume was earnings or whatever. So far so good on TPX. The next one on the list is the this one, the CZZ. And by the way, the CZZ is the one where the parabolic stops started kicking in, right? And this is the poster child of how it's supposed to work when it really works, right? It doesn't get much better than this. And so I know there's a lot to see on this chart just because for one thing I've marked all the trailing stops here. Right? And so anyway, back here this was the trigger. 1750 opened right at literally like right at the trigger the following day, right? So there was no gap up or gap down or anything. And so that's ideally, each stock that triggered in would trigger in like, within, a dime or a quarter of the actual trigger price, but that's not the way the market works, right? You have no idea where any particular stock's going to open the following morning because that's just the nature of the market. The market gaps up and gaps down and all that kind of stuff. So, anyhow, you can see that triggered in, and then what's amazing about this, I mean, this is amazing. You don't see this too often, is that starting on this day right here, you had a higher low the following day, higher low, higher low, higher low, higher low, for literally, well, this was the first day of the higher low. So 1, 2, 3, 4, 5, 6, 7, 8, 9 higher lows in a row. So for 9 days in a row, the low of that trading day was higher than the low of the previous day. And so that's basically what you call a parabolic run up, right? It's parabolic. And so the other interesting thing about, I mean, first of all, it tagged this is like, just under 3 ATRs was the target. So tagged the target really quickly, which was kind of nice. And also the trailing stop. And I can't, I believe that these trailing stops like start kind of on the day where I did the update. I try and do that, but sometimes they're not perfect as far as where they are. But you can see the progression of how the trailing stop just kind of hung back or whatever. And what I'm saying is like this maybe could have gone there, and this one maybe could have started there. I'm not 100% positive because basically I'm just trying to draw the level. Like when I mark these things up on the chart, I'm just putting the level there, and within the next couple of days, if it rolls back over and hits the trailing stop, then it is what it is. So I believe I put this one on last night. So, but anyhow, you basically, let me move those back over just because I don't want to mess up what I've already drawn on this chart, but basically you can see that the stock hit the target, and then the first parabolic stop. And this is kind of interesting. If I back up here, if I back up in time, I'm trying to back up in time. It's not cooperating. There we go. Yeah, there we go. So, like literally, try that. By the time that it got here, right, I had a pretty good move off of that, and so with all these higher lows, the first parabolic stop kicked in up here at 1870, meaning that the stock was having a significant run up that was potentially unsustainable. And so at the time the actual trailing stop was just a break even. And so after a run like that, even though it hit the target, and maybe the idea was that the idea is that you sell half of it at the target, so if not all of it, right? But lower price stock like this, it would have kind of made sense to take half off at the target. But anyway, point of this parabolic stop is that you don't want to let the stock fade all the way back down to the trailing stop once that parabolic stop kicks in, right? And so you would have said, hey, this thing had a huge run up. Let's protect the profits up here. But what's amazing about this is that one kicked in, and then I don't honestly remember if there was one here. Sometimes when I'm doing the update, I may have overlooked whether there was probably another one under the low of this day on 12/11, but following day another one, and maybe not. Maybe not, because I seem to recall Jeffrey saying the other day that it was like three or four parabolic stops that didn't, and then it finally got hit yesterday, right? Finally got hit, and this one, this one was from, I guess, last night or something. I don't know, but anyway, anyway, the one at 2050 was in the middle of this bar, which was weird, but it didn't get hit until yesterday, and so there it is, and it's still hanging around up there. And so basically what that's saying is that it's a good time to just go ahead, take the money and run, rather than let it fall, another dollar down to where this stop is. So, but it is what it is, and this is going to stay open. By the way, this will stay open until it actually hits the trailing stop, because that's just the way we have it set up. We just have it set up so that the trailing stop is the only thing that takes it out. So as of right now, it's up about 20%. So like I said, this is how it works when it works. Anyway, beautiful chart, beautiful progression of the move. I looked up the company, and it's a big diversified Brazilian company. So I mean, it says food and beverages and farm products, but it looks to me like it's big diversified, sort of like a retailer, and maybe like gas stations or something. But it's a Brazilian company. Maybe worth looking into, right? So my guess is that this parabolic run, probably you're probably looking at a pullback. Now that doesn't necessarily mean, there's a couple of spots on this chart, like back over here, where it ran up and then consolidated for a period of time, and then continued to move higher. So this could be just a little consolidation, and you could get a move higher, but sort of the angle of this run up is extraordinary. So anyway, when this does get closed, this is going to turn out to be the trade of the month. So moving on, we got Blackstone, um, BX. That trailing stop moved up just a hair last night. So this is what I mean by like, this should probably be right there, because I updated this last night. Right, that's when this trailing stop moved up 20 cents. So coinciding with yesterday's bar. Anyway, this one's turned out pretty good too. So there's the target. 54.50 broke out of this little. The funny thing is I remember talking about this when it was sort of setting up. I wasn't extremely thrilled with the pattern, because of that weird sort of U dip, but this little area here, looked great. This little triangle breakout here. So this is there was a little bit of the close past the trigger. There was a little bit of a gap there, and so this stop right here, that's what I call the compensation target, meaning that meaning that if you just bought in the following day after it closed over the trigger, like we recommend, then you'd add the difference to the target to compensate for the difference that you paid between the trigger price and where and where the open was. And so anyway, it hit that, luckily. Right, so still looking pretty good too. If I took all this off of the chart, you'd look at that chart and it's looking pretty good, although it's kind of stalled out a little bit up here. I would say. It took a little bit of a dip, kind of bounced back, so it's a little stalled out. So at this point, it could go either direction. To tell you the truth. But anyhow, it hit the target, no matter how you slice it, and the stop is actually at this point now is above even the raised trigger where you would have bought in. And so the other half of the position, assuming assuming you took half off of the target, is at break even. And so Blackstone turned out pretty good. Last but not least, and here's the thing: we don't have excuse me, we don't have a ton of open trades right now, right? I mean, the first one we looked at is just triggering in today. Don't have a ton of open trades because the system is detecting that the market's extended and we're kind of at the top of the cycle, and the trades that are open right now, the swing trades, are ones that have been open for a while. This one goes all the way back to here. Like here was the setup back here, and so the trigger was right there where this circle is on 1111. And of course, this was the prior trade in this stock. We closed it ahead of earnings, and then it triggered again like a week and a half later, and so looking pretty good though. The trailing stop is tightened up, and it's floating around up here at the target, and it wouldn't take. It was a nice consolidation, really. That stop seems to be like sort of at a perfect spot, just below the lows of this consolidation, giving it just enough wiggle room. And so, if for some reason it starts to roll back over, then it's gonna get taken out up here. It could potentially bounce around here and then take another leg up, like it's done several times. It's had several little consolidations and taken another leg up. So looking pretty good. And of course, we've talked about this. Look at the pattern on this thing. So Generac, they make the generators, right? They make generators for all kinds of stuff, backup power and all that kind of good stuff. So it's pretty interesting to see the original trade on here, right? On that pullback and trend line break. And then, quite frankly, if it wasn't for the earnings, at some point it probably would have gotten knocked out, I'm going to say. I mean, this first trade, if there was no earnings in between where it got closed, I'm going to say that at some point here, it looks like it would have likely tagged the stop, but no big deal because got right back in it. And so this is a pretty good company. I mean, this thing, year to date, this thing is up. It looks like it's more than a double, to be honest with you. So, back here at the beginning of the year, it was under 50, and now it's $100. So, good stock. All right, so I don't really have a whole lot of exciting. Don't really have a whole lot of exciting stuff to talk about. Real quick, let's just look through some potential the pending trades. That's what I wanted to look at, was the pending trades. So, yeah, here's another one with that big sort of topping looking pattern, and so trigger trigger still pretty far away there. So, not a huge fan of that one. Let's see, Roku. Now Roku could actually, I'm trying to think. Did earnings come out back there? Yeah, Roku's got some potential because obviously it's been a trade on it back here, right? This was a big earnings move, and then I don't know what that was about. It's some pretty wild action, but this is one of those this is one of those stocks that's always sort of in play, right? It has big runs, big moves. So, let's see, Roku 149. So the trigger's still way far away on this. Yeah, it's still like way. This one's not going to trigger anytime soon. And so ideally, like we always talk about, the stock will either start to consolidate and then turn back up, or continue down and the trigger will come down. And so, at some point in theory, unless it sells, like if this thing were to sell off probably, down around these lows, it'd probably drop off as a candidate. But the idea is that out in the future, it consolidates, turns around, maybe this drifts down, and then it meets that entry out here and triggers on the next big run up when and if it has one. Not the greatest looking pattern. Oh wow, this one, we looked at this last week, and boy, it's having a big day today. I'd have to look at the news, but this one looks like it's basically going to trigger in today. So let's see, 48.05 is the trigger price, huh? Yeah, that's one of the. I wonder what the news is on this. I'll look it up after the show, but that's sort of one of the, I won't say pitfalls, right? I mean, it's not really a pitfall. Is that we can't control how these stocks behave, and so the idea is that nice little pullback and a dip, and then looking for a resumption of the trend, and it just so happens that there's some news. Obvious, I mean, there's got to be some news on this, right? Big long range day up like that, sort of out of the blue. Well, not necessarily. There was one back here too. Um, it's a good looking stock though, I'll tell you that. So, anyways, yeah, this one looks like it's going to trigger in today, and hey, I mean, you never know. You never know. The fact that it gapped up this morning and is pushed up like this tells me that there's some news, and so and you have no idea where it's going to close today or where it's going to open tomorrow. But that's interesting to see. That's why I like to look through these pending trades. Here's Costco. This has been sort of hanging out on the pending trades list for a while. It's still in pullback mode, and so this thing's been on the pending trades now for a while. The actual last couple of trades in this have worked out really well, and it's sort of biding its time here in the midst of a pullback, and we don't know how long that's going to go on or how deep it goes or whatever. So right now, 298. So anyway, there you go. There you go. This should theoretically start to come down a little bit, and at any time Costco can turn back around and make a move, kind of like it did over here. There was a month's worth of consolidation before it turned back around, and then there was a little shallow sort of dip here. But Costco's always a pretty. I mean, it's a very expensive stock, but it's good trading stock. It's done well in the past. Yeah, here's one. I had marked all this up last week, and so you see, this I think was the really good example of why we do actually wait for a close over the trigger. And so let's see, what's the MCK? The trigger price says 145. Right now it's 145, so it looks like it moved, right? That high right there is 144.98, and so that kind of makes sense. But anyway, at the time it was a little bit lower, and I drew like this little box because it was consolidating, and instead of like consolidating and making the U-turn to go higher, look at that, it dropped out of the bottom of the box. And so let me just take that off there. And so it's a great example of why it's just because you get an intraday poke, like there was an intraday poke above the trigger price on that top bar, and then just so happens the system adjusted the trigger price to, at this point, to be over that, right over that high. So, and that can come down too, right? I mean, the idea is that it probably reset itself after this drop and adjusted itself, and so now, same sort of thing and we looked at this one too. It has a habit of taking these really deep pullbacks and then turning around and rallying up, and so theoretically you get a little bit of a consolidation down here. Like ideally, what you'd want to see is a consolidation that looks something like that, where you get enough days of narrow ranges that this could come down and meet it at a lower price. But I'm speaking hypothetically here, right? Because I mean, yeah, stocks never do what you want them to do, but in an ideal situation, that's kind of what the system's working towards, is a narrow range consolidation and then a turn higher. And this would if this consolidated for like 2 weeks in a real narrow range, say between 138 and 140, this is going to come down, and then you'd catch the early breakout. So it just really depends. JetBlue, boy, JetBlue. I really sort of thought that this one was setting up and going to trigger, but you can see at the time that I drew this, it looked like that, right? And so you can see what happened. It turned into a little bit of a different sort of pattern. However, um, it's another. I believe. Hang on. Yeah, it was 2 Wednesdays ago. It was actually poking through. It was actually poking through the trigger price there, right? And I talked about how, well, it's a pretty long range day up. It may or may not close above the trigger. And lo and behold, that particular day, it didn't close above the trigger. And so you can see that there was no follow through to the ups. Now, the following day, you could have had a little pop up and it could have closed the, 1960 or whatever and triggered in, but it didn't. And so that's why it makes sense to wait for close over the trigger. That's the confirmation. So anyway, the trigger is no longer up here at 1950. It's at 1920 now, which is right about there. So that's kind of interesting. That's why it's fun to look at the pending trades, because it kind of, you get a little bit. There you go. 1920 is the current trigger price. You get a little bit of a feel for different situations and price behavior. So 1920 current trigger price. I'm going to mark that on here, just for the fun of it. 1920, so that when we come back in 2 weeks from now, right? Because next Wednesday is Christmas, so obviously there's no show. So when we come back 2 weeks from now, one of two things happen. It fell down here and dropped off the list, or my guess is a couple weeks from now it's going to be. Actually, let me think about something here. If next Wednesday's Christmas, the following Wednesday's New Year's Day, which is a holiday, and so the market would be closed, and so I'm looking at my calendar, and so hey, there's no reason to do a show on New Year's Day, right? With the market closed. So I guess I'm gonna see you folks, not next week on Christmas Day, and not the week after that on New Year's Day. So I guess I'm going to see you in the new year. And I know you'll miss me for a couple of weeks, but it'll be fun. We'll come back in the new year and everything will start fresh. And that's going to be 2020 is going to be an interesting year, right? Interesting year. It's an election year, and a lot of craziness going on here with the market this year, seemingly, being invincible. And so Going to be interesting to see what happens here. So many times this year, and this is what's great about an automated system like this that has no emotions, is that there's been quite a few times this year that I thought, hey, this market's probably due for a pullback for whatever reason, just human nature, right? And experience. But the funny thing is that the system, does what it's programmed to do without worrying about whether the market, is maybe due for a pullback. And so I trust it more than I trust myself looking at charts saying, "Hey, this market's due to pull back." So it doesn't care, right? Like even though the market's extended today, we got a new stock triggering in. So anyway, this is the very last one on the pending trades list, and the trigger's still sitting up here right at 49 bucks. Where I had it marked before. There was no close over the trigger there, and so it is what it is. It is what it is, and that was just sort of a little bit of an anomaly there, right? Nice sort of flag work in here. This consolidation. There was that one little kind of poke up day, fading, and so yeah, just another good example of why. And I would guess over a year's period of time or something, I'd say it'd probably be a wash, but this is why the confirmation is a close. The main reason why the system was designed to wait for a close over the trigger price is, for one thing, it's like Jeffrey always says, it's like a barrier, right? Like the stock's got to make it through that barrier and past that barrier to go on and make a move. And so you can see that, even though it poked through the barrier, wasn't able to close above it, and you can see that, it hasn't really resumed its uptrend. It's still in this consolidation pattern. And so that's the confirmation that we look for. Anyhow, it is what it is. Trigger's sitting there at 49 bucks, and that's the last of the pending trades. Had a couple of new ones came on recently, but this one, WGO and JetBlue have been on here since mid-November. Or actually, I should say like late November. So um, they may stay on till they trigger, or they may not. So we'll have to see what happens. But anyway, I will hope that everyone has a good holiday season for the next couple of weeks. The market's probably going to be dull anyway, and I don't know if there'll be a whole lot of action either way. I would guess that the S&P is probably gonna trade in a fairly narrow range or whatever. So yeah, I mean it seems extended to me, and so maybe they can just hang on. And of course, here's the thing: we're in like the seasonally strongest time of the year. Actually, the Santa Claus rally is most people don't know this. They like to start throwing around the phrase Santa Claus rally, anytime around Christmas or whatever, a week or two before. But um, the Stock Traders Almanac guy, Hirsch, right? Hirsch is the one that I looked up the definition of the Santa Claus rally many years ago. Right, many years ago I looked it up, and it's actually the week after Christmas, the week between Christmas and New Year is the official definition of the Santa Claus rally window, right? And so the Santa Claus rally will be like, if it happens, we'll start next Thursday. But so there, I mean, there you go. You've got there's 9 trading days left, and the theoretical Santa Claus rally is supposed to come. Well, let's see. There's Christmas Eve, and there's Christmas Day, and so the Santa Claus rally. I believe it's. Do I have this in the right spot? That's the 31st. Yeah. Okay. So the Santa Claus rally would come like somewhere in this window over here, right? Like between Christmas and like the end of next or the week after that. So I think it goes into like the third or something, right? So sometimes, so the Santa Claus rally window is like here. Amazingly enough. Let's see, that's the third. There we go. Just for the fun of it. So there you go. The day after Christmas to that Friday, 1 3. There's your Santa Claus rally window, if it happens this year. And so you never know. Anyway, hey, I hope everybody has a great holiday season, and I will see you guys back here 3 Wednesdays from today in the new year. Have a safe and good Christmas.